From March to June, what a change we have seen. In March, exactly on the last day of the month, the markets were quite desperate. We were wondering why we were seeing so much weakness. We could buy whatever we wanted in March. On June 30th, by the time one quarter ended, things had turned quite a bit. A week later, today, as I record this video, it looks even more sharper and stark in contrast. Finding ideas to buy is very difficult, and with every passing day, your investment universe, what you can buy on a given day, is narrowing. This is not something that we should worry about. Many people think that if you cannot buy something on a given day, you have missed it forever. That's not true. On several occasions, we have seen that stocks do give another opportunity exactly when we think they would not give us another opportunity. So when consensus reaches that point when you think that train has permanently gone away, we would see some other train stop by and we would still make our investment journey. I don't know when that day is going to come, but I'm not so pessimistic that you have completely missed the bus. Many of you may be feeling that you should have bought in March. There is a strong sense of regret that I see in people, especially those who are arguing that markets would come down further in March. I didn't know whether markets would go up or come down in March, but what I knew was clear. I knew that I need to invest where I had my conviction. I was not going to wait for the market sentiment to tell me what to do on an idea, on a stock where my conviction was running high. Where my conviction was running low, I was happy to wait. I still am happy to wait where my conviction is not right, especially on the valuation. So once you know this, you are not going to make investment mistakes. You are going to put your money exactly in a place where you are comfortable, and even if the market temporarily sees negative sentiment and the price of stocks you bought go down, it would not bother you. You would probably be buying more. This is not some kind of a thing you don't know. Everybody knows this, but we don't practice it, and that is where we start facing issues with ourselves. When you don't practice your investing in a way which gives you comfort, when you are very erratic in your responses, when you are sentiment driven, and when you want volatility but you can't deal with it, you're not going to make the most out of all these situations in your investing. Today the markets are up. You're not able to buy most of the stocks you wanted to buy. You don't find too many ideas. Stick to only the ideas you're comfortable buying right now. If you find valuations of some companies running way ahead of what you think is fair, and you see them discounting the very distant future, maybe you can consider trimming your holdings in those companies as well. But that's not a compulsion. Be very, very stock specific and make your judgments sharp enough so that you don't regret selling also later. And once you decide to sell, stagger your selling and sell in such a way that you don't rush your decision making and you don't make your execution too hasty. So the important thing is to stay calm, know what you have to do, and just do whatever it takes. This is a phase which too shall pass, and you will know it only after it has passed, and until it passes, you need to show the required patience with your investments. I want to tell you, the good news is that in every market context there will be contrarian ideas. Look for them. They would be getting thrown away because of temporary near-term factors. See if you like any of them, and if you really like owning some of them for the long term, bite into them when the markets don't believe in them. That is what you can do in these very, very frothy market circumstances. Thank you for watching this video.